Good morning and happy Friday, everybody. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. All right, so we're going to get into the nitty-gritty charts, no BS, just charts here at VerifiedInvesting.com. Before we do that, there's three key factors that are driving the futures lower this morning in the news. Number one, it's tariffs on Canada. So Trump announcing that, again, there will be new tariffs potentially starting on August 1st for 35% on Canada. If we see any sort of retaliation, or if the U.S. sees retaliation, then those tariffs will go up even further. So that kind of a little bit of a shock. Now, many people would say, well, we've heard about a lot of these letters that go out on tariffs over the last few days. Yes, but this is one of the biggest trading partners here in the U.S., and so it does happen to carry more weight. Another factor making markets uneasy at these ridiculous valuation levels is attacks on Powell. So the attacks on Fed Chair Powell have continued to increase from the administration. They're now talking about, has the Federal Reserve and the chairman broken laws, right? So again, you're now taking it from just saying, hey, he needs to cut rates immediately, he's a horrible individual, he's stupid, whatever you want to say, to now, hey, let's have him investigated. And that again is making investors, especially globally, very kind of wary. All right, it's taking it to a new level of risk. The last one is Jamie Dimon. Jamie Dimon, the head of JP Morgan Chase. He came out and said that he thinks rates could go up and that the markets are not pricing in adequately the risk of rates still going higher. Now, everyone, including myself, thinks that the Fed is going to cut rates, and I agree. But remember, that's the short end. The short end of the curve is what the Feds control. The long end is controlled by the markets. What he is saying is that inflation is going to spike higher, not only because of tariffs, but also because of deportations. Again, farm workers, hotel workers. A lot of farms are reporting that they have no one to pick produce, and they're going to have to spend a lot more money to hire Americans that are not willing to do it for the same cost as immigrants. So again, we're seeing these type of factors influencing the markets today. So I just wanted to give you kind of a summary there. Let's get right into the charts here. As we take a look, the S&P futures are down. This is when the tariff news on Canada came out right here. We can see that drop right there. And then the markets again continue to trade down just off of the lows. Now, one of the things we want to keep an eye on is when the markets open, do buy the dippers emerge? Do we see the market spiking back up? Or do we see more institutional sell-side action? And by the way, we'll get into crypto today. Incredible moves in crypto and in Bitcoin. We'll talk about the key levels. I'll even cover Ethereum today in the crypto markets. But first and foremost, we can see yesterday's price action in the S&P and then this fall here. Now, notice when this news came out. Take a look, guys. This is so interesting to me because the news on Canada came out at 8 p.m. Eastern time, exactly at 8 p.m. Eastern time. Can anyone guess why that news from the administration would have been released at 8 p.m.? Because that's when after hours trading closed. So again, we've seen from the administration who released a lot of these letters the night before July 4th holiday, right? So we had a half day on that Thursday, markets closed, and then that night we heard about these tariff letters going out, the longest period before the market reopened on Monday. And then here we see again, waiting until the after hours close, then releasing it immediately so it has the most amount of time before the markets open. Very interesting. What this shows me, by the way, is that the Trump administration really does care about what the stock market does. Otherwise, they wouldn't care when this stuff is released. Very, very important to take that into account. Now, let's go over a few of these other charts. We've got to look at the S&P daily chart. This, again, is exactly what it shows here. We can see, again, we have the S&P into resistance a few days ago. It pulled back. It started to float up. Now we're seeing a day where we likely will at least start out down. Now, the question is, do we end down? We don't know. We'll have to watch and see. But again, the idea is, and I said this yesterday in the game plan, this area on the S&P is just going to be mammoth resistance. 3 trend lines now diverging, so this whole zone becomes big resistance. Now, if we look at the US dollar, the dollar is trying to creep above this little resistance level. We can see that over the last few days, it's punctured this line multiple times, but has yet to close above. So I'll be watching to see, do we get a daily close above this 97.75 level? Right now, we're at 97.82 on the DXY, but again, it is still early in the day. The 10-year yield is pushing higher here. Again, according to Jamie Dimon, he would not be surprised if the 10-year yield goes up. And by the way, keep in mind, next week, CPI and PPI data is released, along with financial earnings coming out, Netflix, Taiwan Semi. Things are going to get crazy next week, and we'll know a lot more on inflation. All right, NVIDIA. So I highlighted NVIDIA yesterday for hitting that trend line and then reversing. Yesterday, it went up. It closed higher, but look, it closed right at or below that trend line still. And again, this is basically the marker of $4 trillion. So we did get a $4 trillion close on market cap of NVIDIA yesterday, but it is still at a big resistance point. Take a look here. You can see this parallel line or this trend line down here and a perfect parallel right through here. And I think it's so poetic and amazing to think that the trend line coincides exactly on NVIDIA with the 4 trillion valuation of market cap. Just kind of weird how that stuff works out. All right, looking at Meta here, guys. Meta continues to struggle here. You might have a little bearish pattern development here. Let's watch here as you're watching this chart. So number one, double top. We got a perfect double top. I love the gap above to kind of wipe out the weak-handed shorts. Then it comes back in and down. Then we get the inside bar pattern. As a chartist, what you're watching for on this flag pattern is, do you violate the low of the flag? That's your first point to watch on this chart. That's around $712.50 approximately. So if we go below that, then the bear flag is likely has teeth, and you'll see Meta come down. Now, if it doesn't, then eventually, if it just continues to trade like this, it probably does pop higher. But right now, that's what we're watching. Meta on a pre-market basis is trading at 723, as we can see right here. And it is down on the day, but still about check that, $11 above that key level on the chart. Netflix, this one's an important one, guys. Arguably, Netflix has been the strongest mega cap. Now, it's not a $1 trillion company, but it is in the 600 billion range now, I believe. And it's had just such an incredible nonstop run from the lows in 2022. Lows in 2022, $165. It topped out at 1,340. Now, what's interesting here is that even as the stock market has been going sideways to higher, all right, in recent days and weeks, this has now started to reverse and go lower. In fact, Netflix is now $100 off of its highs. So that, to me, could be a leading indicator of valuation concerns. Netflix right at the high end of that. Worry about valuations getting too frothy. Forward PE on the S&P is 23 now, which historically is very rich as well. But again, just keeping an eye on charts like this that are now starting to potentially roll over. Another one that caught my eye, CrowdStrike. CrowdStrike was basically at all-time highs. Notice this classic trend line here. Look, right there, it hit, reversed, went up, hit again, reversed, and then look at yesterday. Even though the stock market was basically flat on the day yesterday to up, we saw CrowdStrike falling sharply on the day, down 5%. So we're seeing more and more. Like, you could go through a bunch of big names. I'm not going to cover them all here, but a lot of these pretty big names, maybe not the mega caps all, but a lot of the big names are showing weakness here in the last few days, even in spite of the stock market grinding higher. And by the way, why is the stock market going up still? Most of it has to do with the semiconductors, right? The SMH has been resilient. And if we look at the SMH, you can see it closed basically at all-time highs, but also look, you do have a key trend line here that the SMH is into. So watch this level on the semis here in the coming days. Amazon, great example of a chart on the mega caps, $1 trillion company, not at all-time highs. And this is actually, to me, a bearish pattern. Bigger down move. This would be your flagpole, and this would be your flag. Watch for a break on Amazon of this trend line here. Basically, any daily close below 219, and it's vulnerable for a dip all the way back to about 208, and eventually all the way back to this gap fill at 193. But again, this hasn't broken yet. It's still technically intact in a shorter-term uptrend since April. But if you break this line, this is your trend line, right? This is your trend line. And if we break that, it opens the door to further downside. All right, let's flip over to crypto. We got to talk crypto here. Take a look, guys. So we have this chart. This is what I'm following now. This is the only thing to me that matters on whether or not Bitcoin can sustain its rally. We talked about this line from 2017 to 2021 highs to 2024 highs. we are above it. What a move in the last 24 hours on Bitcoin. It is above this line. If you look at this over here, we were above this line here. We were above this line here, right? So there were multiple points where we were above this trend line. But the question is, we have not had a weekly close above the line. So let's watch closely here, guys. All right. So pierces on a weekly basis are not surprising. Here you had it right there. But the question is, come Sunday night, where does this candle close? Is it back to about 115 or below? Or does it stay above? If it stays above, the bulls will retain control. If it comes back underneath, then obviously the bears will still say they held the line. So this line right here at 115 approximately, come Sunday night when this closes, that is going to be a key level to watch. Ethereum, take a look here, guys. Ethereum, I did pull the trigger on a small short starter position on Ethereum this morning. Why? Because you have an upsloping trend line with a bottom level here. Look at this. Support, bounced, support, 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 breakdown, retrace to the scene of the crime, plus the upsloping trend line. Two factors there. Now, remember, I'm a short-term trader, so I'm not passing judgment on the mid to long-term on Ethereum. Honestly, I couldn't care less about it. But as a trader, that's a level to start a toe in the water. Not a full foot, just a toe in the water on the short side. You have to respect the momentum that crypto is showing in this market. And therefore, again, just a toe at that major multi-factor trend line resistance. All right, let's continue on, guys. Let's take a look at gold today, see what gold's up to. Gold is rejuvenated again on the back of this tariff concerns and some of the comments out there about inflation from Jamie Dimon. And again, we could see here a beautiful push up here today. Gold again pushing higher. Now, listen, we're still vulnerable, but we're going to know probably in the next week, one way or the other, if this chart is going to break, right? And you might say, well, why? Why will we know in the next week? Well, basically what we have is we have this here and this here, right? These two lines are converging and price is going to be forced to either break out, right? Or break to the downside. So again, you could stay in here for another week or so, but at some point right over here, it's going to either have to make a decision to break out or break down. Time will tell where we ultimately go, right? So again, very interesting stuff on gold here, but gold is catching a bid today. Now, you guys know I've been bullish on silver. Taking a look, silver continues to rally. Beautiful move on silver. Again, this was a bullish pattern. Then it got above this and kind of hugged the line, which is bullish. And now it's taking a leg up. Upside target remains right here around 39. So listen, we're almost at 38. We're at 37.66. 39 to me would be that target. Why is it a target that I'm watching? Simply put, you have a trend line going back to 2022 that connects through every major top in silver. Now, listen, it's not to say, and I want to really reiterate this for newbies watching, silver can go through there. It can, but you always, and this is something I've learned the hard way in my trading, you respect resistance just like you respect support until proven otherwise. So just like on Bitcoin, I have to respect that line because it's been respected every time prior until it's negated. All right. Because again, many of us, we have our underlying hopes and dreams. And we always say, oh, well, I really am holding silver, so I really hope it goes to 50 again. And eventually, I actually believe it will. But in the short term, I can't assume it will until it breaks the key level. And same thing on Bitcoin. And Bitcoin is on the verge of doing so. We just have to continue to monitor it. All right, going on to oil here. Let's continue through, guys. U.S. oil. Let's take a look here. Oil continues to trade inside of this little bearish flag pattern. Beautiful reversal. And by the way, that was one of the great calls in the commodity sector recently. I still remember telling you guys I was short on oil up here and all the comments flooding in how crazy I was, how I was going to get wrecked. And again, for me, remember, I respect resistance and trade it until it breaks. Once it breaks, you can stop yourself out. But I respect it until otherwise, because if it's worked perfectly here, kissed here, hit here, and worked perfectly, who am I to say this time is different, right? And I think that's important for us to go with. Now, again, beautiful drop, consolidation here. We'll see again how much more chop it gets, but eventually this pattern generally resolves itself to the downside, as bear flags have the name bear in them, and they generally play out to the downside. Natural gas, guys, had a good bounce yesterday. It's pausing today. Notice where it's pausing, right on this trend line. So keep an eye on this. It's trying to recapture, but we can see that the line is still resistance. All right, let's go quickly back to the ES futures and just take a check in here, guys. The ES futures are trading again just off of their lows in the overnight session. As I stated earlier on, there are concerns. So number one, the markets are extremely overbought. Even if they just pause, they need to at least pause or have a small pullback. We know the S&P hit that key level a couple days ago, then kind of pulled back for a day or so, then it kind of floated higher, but stayed under those trend lines. So on a technical basis, the markets are signaling some risk here for a pullback or profit taking. And then you have the news coinciding of Canadian potential tariffs, 35%, and then also Jerome Powell getting attacked on a legal aspect, potential investigations, which is, again, credibility of the financial system here in the U.S. at risk. And that's some concern as well, is that if you see the Fed really getting attacked from a legal standpoint, it will make other countries think twice about holding dollars or not, or whether or not they continue to diversify away from treasuries and dollars. And that can actually drive rates up. So it actually can work in the inverse of what Trump wants, right? Trump wants the rates to come down. Well, the short end can be done whatever they want, right? The Fed controls that. But what about the long end? The long end's what we all worry about when we buy a house, right? That's the 30-year. The 30-year is what we care about. And if you attack the credibility and other people say, hey, listen, we can't trust the U.S. system anymore, rates will automatically go up because it's supply and demand for the long end, right? It's if you're not willing to, take 4% or 5 or 6% on a bond, and the U.S. has to say, well, we have to pay for our debt. We have to finance our debt. So we're going to have to offer 10%. Well, guess what? Rates are going way higher if that happens. Now, hopefully that doesn't happen, but it is playing with fire by going after the Fed in this situation. We'll see again who Trump announces to replace Jerome Powell when his term ends next year. And then lastly, the Jamie Dimon comments. Again, listen, he's not always right, but obviously he's done something right in his career to be at the head of JP Morgan Chase, the most successful bank in the U.S. And so you always pay attention. Whether or not he's right or not, we'll find out. It's just like Warren Buffett. Listen, Warren Buffett's a long-term investor. He has his strict policies that he follows for his investments. During bull markets, he looks like the fool. And then in bear markets, he looks like the genius, right? So again, it's all about that kind of time frame that you're focusing on. All right, you guys go have a great rest of your Friday. I'll be back for the weekly wrap-up later today. Again, we're going to go trade and make some money. Come join us here at Verified Investing, and thank you for your support. Take care.